So Bitcoin comes along in 2008 in the middle of the crisis. It's kind of like it was perfectly prepared for this and said, Satoshi goes, hey, look at this. I can create an algorithm that only creates so much of this thing, the Bitcoin, and it can never vary, ever. So therefore, this is scarcity that humans can't fuck around with. Now, humans have this propensity to fuck around with scarcity because they're economically incentivized to do so. Here they can't. So then they become economically incentivized to own this asset because it's scarce and it cannot be changed because it has this consistent supply curve and a limited number. So Bitcoin becomes this great store of value.
On today's episode, Real Vision CEO Raoul Paul shares his insights with you about the future of Bitcoin and the American economy. Cryptocurrencies are already struggling after a disastrous decline, and as the feds hike the interest rates, it's only a matter of time before the stock market enters a challenging period too. Euro is again down compared to the US dollar. And the war in Eastern Europe, coupled with the inflation in the United States, is only making the global economic outlook more adverse in the coming months. Stay with us till the end, as he will also highlight the key economic challenges that are coming ahead and how you can create a strategy that will let you thrive even in the challenging times ahead.
You distance yourself from price action because your theory is that it's going to go from here to a lot further over time. That keyword is over time. And we've all said, all of us have said, and we know it does this a lot on the way. So then if you know that, it's a known, why the hell when it happens, do people forget? It's so funny, when Bitcoin and ETH crashed last year, fell 55% from the high. I spoke to my wife and I'm like, God, everybody's freaking out. And she's like, why, what's happened? I said, well, it's down 50%. She said, but you said that's normal. And her exact words, so just shut the fuck up. You should be buying here, not freaking out. I'm like, yeah, true.
As you already know, Bitcoin and cryptos in general have gone down drastically this year. But guess what? You should distance yourself from the price action. Why? Because in Raoul's own words, the prices are going to go up from here a lot over time. But the tricky part is, you have to pay attention to the key word. The key word here is over time. Because of that, you should be buying at a lowered cost right now, rather than panicking. Many people would do that if the prices of their favorite perfume or food items go down. But they always panic when the same happens to stocks or the Bitcoin. This reminds me of one thing that legends like Warren Buffett, Charlie Munger, and Jeff Bezos have always said. In the short run, markets are a voting machine, and in the long run, it's a weighing machine.
The US is about 25% of the global economy, yet they have 100% equivalent of global GDP in debt. So this is the most indebted economy in the history of world economics in terms of global debt, because it's so big. Now, the US is not the only one here. Europe's got massive debts. Japan's got massive debts. So China's got big debts. Everyone's got debts because we borrowed for our future selves. Why get enough tax income for the road system I need to build? Why not just issue more bonds and build it now? Because the bet is I'll create more productivity in the future and then GDP grows and it's easier to pay off. And that generally works okay.
The root of all of America's economic problems can be traced to one thing: the relationship between debt and productivity. As you heard, you take debt today so you can be more productive in the future. Pay it off and prosper from the investment. Today, America is the most indebted nation in the history of mankind. And have we achieved the prosperity of that productivity?
If too many people come into the workforce at the same time, they compete with each other for wages. And if you look back and inflation adjust wages for the average median American or the average American, particularly the median American, over the last 45 years, it's not gone up at all. So there's been no productivity growth. The miracle never happened.
The so-called American miracle will never happen. The debt went up, but the productivity never increased. The American dream turned into a nightmare. So, what's the best financial advice in such a turbulent time? The answer is not as complex as you would imagine. Let's hear it.
I observe the sirens, I hear the song, but they don't affect me. Well, they obviously do affect you, but you try not to let it affect you as much. You distance yourself from price action because your theory is that it's going to go from here to a lot further over time. That key word is over time. And we've all of us have said, and we know it does this a lot on the way.
Keep in mind that these market crashes and declines are not here forever, and there's a lot on the way too. Distance yourself from the emotions and panic. Stay consistent and brutally realistic, and you will come out of this as a winner, not just a survivor. What's your opinion of what Raoul said? What do you think is the best strategy? Hit that subscribe button for more videos just like this, and I'll be back soon with another one.